Hi, Goosey. Hi, babe. Oh, sorry. You are a gross dog. Hello. Welcome to Canadian Money Talk. Let me know if you have any questions about Canadian investing, personal finance, anything I can do to help you towards financial independence, etc. I'm happy to help as much as I can. Hello, Bristol. What can I do for you? I have a puppy beside me, so my attention occasionally is going to go over to her. Any stocks you want me to look at? Any strategy? I can even talk a little bit about taxes, even though I'm not an accountant. What can I help with? Well, if you've started investing, then we can talk about what you have, what your high level goals are. Do you have a financial advisor? Um, do you know how to check the mutual funds that you're in, whether they're good? We can talk about that. If you're doing individual stocks, I can look a few of them up for you. Uh, you know, if you're a beginner, we can talk about just basic exchange traded funds that you can do yourself. Um, basic personal finance. Yeah, a few other people have jumped on, so but first come first serve as far as questions goes. So um, yeah, I mean, as as far as having the money to invest, spend less than you earn. It's all about priorities, right? If you want to retire at 60, 65, you're supposed to save 15% of your gross income. Most Canadians are way under that. Americans even worse. If you want to retire early, then you need to be saving a higher percentage. Um, I retired at 46 out of IT. Um, Bristol, you're 12. Okay. So, um, well, then, I mean, talk to your parents about money. Um, Learn about how everything works and so on. We're probably like talking to you about investing. You're not able to invest yet, but talk to your parents and just find out how how they do their finances and find out what they're investing and so on. So yeah, at 12, I think at 18 you're allowed to like officially get a and then Jana says that she's 9. Yeah, so you don't need to worry about it yet. But the thing is, if things that you know about McDonald's, Netflix, Amazon, all of that stuff, you can invest in. You can buy something called a share in. meaning you own a very tiny percentage of a very tiny part of that company. And then if the company does well, then the share that you own, or the shares more likely, they go up in price, and that's how you make money without, working for it, like your parents do. Uh, Bristol says, I think it's cool that you're here to help. That's really kind. Yeah, thanks. I actually do want to teach more at a high school, or even college, which would be, 15 to 20 something year olds. I think, especially in Canada, there's probably in the US as well, there's not very much education about money. And then young adults go into the world, and um, they make mistakes, and those are preventable. And the thing is, their parents maybe didn't teach them either. So um, yeah. Um, yeah, like I've been thinking about what I would teach in the high school or whatever, but I never really thought about 12-year-olds. Like, I mean, allowance and so on would be the obvious thing. But like, if you do chores, or if you just get an allowance. Where's my dog? If you get an allowance, some of it you spend, but also, instead of buying small things as the money comes in, then you can save, and then you can buy a bigger thing, right? And as an adult, you're not only doing things for today, but you also have to think about the future. And that's why you put some of the money aside and let it grow, and you're just spending later. But then you have more money. And of course, I know this is totally unreal to you, but as as you get older, something called retirement. You're 12. Canadians usually retire at 65. At that point, you don't want to work anymore. So if you don't have enough money saved up, then there's a problem. So you will need this when you're older. Absolutely. Keep it in mind. Um, that you can the money that you don't spend immediately, that you can make it work for you. Um, and over time, if you start early, it does amazing things. So, like I said, talk to your parents. Tell them that you're interested. Um, and kind of go from there. But I do appreciate that you joined. I'm probably the age of your parents, or if not older. So and I don't have any kids, so I haven't really talked to young kids about money. But yeah. Anyways, well, lovely to meet you, Bristol. Thanks for coming on, and you know, hopefully I got you at least thinking about the right direction. Anybody else that's on, if you have any questions about Canadian personal finance, um, investing, how to reach financial independence so you don't have to work anymore, anything I can help with, I'm happy to. I do these lives on TikTok as well as YouTube, alternating Wednesdays. So this week is YouTube. Next week is going to be TikTok, and then um, we'll skip 1 week there for Christmas. But otherwise, yeah, I'm just looking down. I have a 3-month-old puppy who apparently I didn't tire out enough prior to this. So at some point, she's just going to fall asleep. Anyway, so yeah, anybody, if you guys have any questions, anything I can help with, how to start, if you have a financial advisor, if you're an adult, if they're doing a good job for you, there's some things you can kind of look at. You can also find your mutual funds that they got you into. Oh, here's Bibby. Hi, just letting you know I saw your announcement about talking about options. Really looking forward to that. Yeah, cool. Yeah. Once a month, I do a little bit of thing with options. So in terms of difficulty, you got mutual funds are probably the easiest. Exchange traded. Excuse me. Oh, she knocked over the garbage can. Ugh. You are a pest. Apologies. I would say this is what working from home does, but I'm not working. Come up here and just take it easy. Anyways, I live in Edmonton and it's cold and she does not want to go outside for a walk. So it's hard to tire her out. Anyways, so in terms of difficulty and the amount of knowledge that you need, mutual funds are easiest at the bottom. Exchange traded funds are kind of the next thing. Individual stocks, which I don't recommend for beginners. And jump up. Those are kind of next, and then options, which are puts and calls, are the kind of the most challenging. I've been learning it since the depths of COVID, and there's a lot of academic stuff to options, which I kind of find interesting. Darn it, dog. But anyway, so what I do is options are contracts. Nothing with lawyers. They're very easily defined, and they have an expiry date. They have something called a strike price, and they're for a specific stock. So the stock price is here right now, and what I do is I sell a promise to buy a stock at the strike price, and I always set it down here. It expires usually 6 weeks out, and I get money for that promise. But now I have an obligation. And so if the stock goes up, nobody will want to sell me their stock at this price. That's the promise, is that I promise to buy a stock at this price. And whoever bought that promise gets to sell it to me at this price. I'm basically selling insurance. And if the stock goes up, nobody will take me up on this because it doesn't make logical sense. But if the stock goes down, I have to buy it at this price. Now, I only do this on stock that I already own and I like. Come here. Come here. Okay. So I only do this on stock that I already own and like. I collect. Gotcha. She's 3 months old. Her name is Goose. And so if the stock goes down in price, then I will get more of it, and I get it at a price that's cheaper than what it was. Nope, not interested in going outside. Okay, I get it when the stock price was here, and I sold the promise, and the stock went down. I have to buy it at this price, but I was, let's say, willing to buy it even at this price, so I'm getting it at a discount. Plus, I got some cash right up front. So that's sort of my strategy to get more stocks. Plus make a little bit extra cash. And of course, if it goes up, then that cash that I got right up front was completely for free. So I'm very much on board for that. So BB says, do you need to specify how much of the stock you will buy, like 100 shares or 1,000 shares? Yes. We're not playing anymore. You have to do it in multiples of 100 shares. One contract is 100 shares. So you can do 100, 200 shares, 300 shares, and so on. I usually do it so I'm on the hook for $5,000 to $10,000 for each one. So depending on what the share price is, I might buy, like if it's TD or something, then they're at 70 bucks and change. So I'll just do 100 shares, one contract. So I'm on the hook for $7,000. If TD goes up, that my promise expires worthless. So I got the money for nothing. If the stock goes down, then I have to buy it for whatever I promised. But if I wanted to buy TD anyways, then I'm just getting the extra money for nothing. So yeah, you have to specify the number of contracts, and it's all in multiples of 100 shares. So with some companies like like Microsoft or something, then it ends up being with insignificant amounts. So you have to be careful. Bibi says, just trying to figure out who will want to insure on 100 shares. Will probably people aggregate multiple options for larger blocks of stock. Yeah, I mean, it depends who you're selling that contract to. It could be an institution that has huge amounts of shares. It could also be that they don't have the shares at all. They are just betting that the stock will go down, because as the stock is here, the strike price is here. As the stock goes down, this becomes more valuable, because you can always sell it. And so somebody is just betting that the stock will go down, and so they buy these contracts, they buy these options. So it could be somebody who's, and this was how it was originally intended, was that it was insurance. But now there's options traders, which I'm not. I will sell these things and then I'll take the stock. Option traders, if they were to do kind of the same thing that I am, they would get out of it and they would buy back that contract, if they didn't want the shares, which they generally don't. So I'm sort of turning long-term investing into a little bit of a speculation by using these options, but I'm using it just to get the shares and to make a little bit extra cash, and for fun, really. I'm not an options trader where I do all these things and then I actually want no part of the shares. So, Baby says, are the prices on these options set by the market or by your judgment? Well, they're set by the market. I can offer whatever, like I say, I want this much for this contract. And if nobody takes me up on it, then obviously I want it too much and I need to come down. But of course, the less I sell it for, the less cash I get. So, the premium for 100 shares of insurance is determined entirely on what stock it is, number one. How far away, like, is the stock price here and you're down here, and there's very little chance that it'll actually drop down here, then you're not going to get very much premium. Okay, because there's no chance. While if you go like this, then there's a much higher premium. And The other factor is the volatility of the stock. So if the stock is very volatile and there's a good chance that it'll drop down, then you'll get a higher premium. So for volatility and the time, because if you sell something that's a year out, there's a better chance that it's going to come down in that year than if you're selling something that's a week out. So I do the 6 weeks, I do 42 days. I do it on the first Friday of the month, and they're expiring third Friday of the following month. That's when that time value, because in the premium there's without going into too much detail, but nobody else is asking questions. There's intrinsic and there's extrinsic value. Intrinsic value is when it's in the money, when it dropped below, the stock price dropped below the strike price. That's intrinsic. And the other part is extrinsic, which is the time value. So something that's a year out has a lot of extrinsic value, but as time goes by, that extrinsic value, that time value comes down until on the last day, on the expiry day, there's no time value left because the time has all gone by. You want to go outside? You just looking? Yeah? No. All right. So the reason why I do it for 6 weeks out is number one for regularity, and number two for the fact that during the last 6 weeks the time value drops off the quickest. Okay. I mean, you can get out. You can kind of find the best method that works for you. I would really say that, like, even compared to stocks, there's so much with options, so much, and so many things you can do. You can, yeah, basically any theory you have about what a share price is going to do, you can do the option thing to make money off of it. So they're very cool. They're like I said, somewhat academic, which is interesting. For anybody who's taken calculus and remembers it, you'll see and probability and statistics. You'll see shades of that in options, which I find really interesting. I enjoyed both of those in high school and university, and this was a bit of a blast from the past. So yeah, but be careful. There's a multiplier. There's a bit of a leverage effect. There's a multiplier effect where, like the premiums that I'm getting, they're only basically for 6 weeks out, right? But if you annualize them, you can get 10, 20, 30% return. So if you're right and the stock goes up, on the money that's at risk, like I said earlier, you know, the 7,000 that I would have to pay to buy TD, I'm getting off of that risk money. I can be getting, maybe not particularly for TD, but I could be getting 15, 20% return just for having access to the money. Yep. So I think where people get into trouble is if they buy options where they're betting that something's either going to go up or something's going to go down. And if they're wrong and the option expires worthless, then whatever money they spent on that option is, come on, babe. Come on. All right. Okay, free. Whatever money they spent on that option is gone. So for me, the worst thing that will happen is that I'll get the stock maybe at a more expensive price than it is currently. But if somebody bought that option and then the stock went up, then they get nothing. So that's where people get into trouble. Okay, BB says, in the context that you mentioned, if the stock is something I would want to accumulate, I can see how that can be useful. Yeah, like I remember a few years back, I was working out at the gym, and I always have some sort of podcast or something going on in the headphones. And Bank of Nova Scotia got a new CEO. The market didn't seem to like him. He wasn't from the banking industry, but he was international, and they still had stuff in the Caribbean and Latin America. And market dropped. I think like, sorry, not the market, the Bank of Nova Scotia stock dropped. And I'm just like, okay, let's finish up this workout. I'm gonna go home, buy some shares. And I'm like, if you're gonna buy shares outright, just sell some puts. Just sell some puts. I already had tons of Bank of Nova Scotia stock, so if the stock went up, I was going to benefit from that, and I was going to get the premium for selling the puts. And okay, yeah, you remember that, right? And BNS has, in the end, done fairly well. They got out of Latin America and all that. But the point is, I only do this on stock that I already own. So the bad thing is, stock is here. We sell the put strike here. If the stock goes up, yeah, I collected the premium, but I never get the stock. So I miss out on the upside. But if I already own a bunch, then I'm still feeling pretty good about myself. Plus, I got that nice premium, which could be, like I said, for the big banks, will be 10, 15% maybe. And yeah, so and of course, if it goes down further, then I will have collected a nice premium, and I get to buy a cheap stock that I like. So, like, to me, now let's hi, just to be honest, I'm on the hook every month, right? Every month I do I do like $30,000-$40,000 worth that I'm on the hook for. I'll get, $1,000, 1,500 in premiums, so that makes me feel better. But now, if the market tanks in the next 6 weeks, I need to come up with $40,000 worth of cash to buy that stock. I don't know about you, but I don't have a $500,000 per year sitting around somewhere. So I am actually hoping that the shares will go up. I'll benefit from already holding the stock previously, and they'll all expire worthless. That's sort of my best case. If there's one or two, and and I have to come up with 10 grand a month, like, I can sort of swing that, and the rest goes on margin loan. So yeah, for me, my biggest positions are goeasy and Manulife. Manulife, I kept pouring money into while they were in the penalty box, and they just stayed in a range for years, and they kept paying the dividend. I'm like, it's all right. And then I think they got out of some long-term care insurance, if memory serves, and the market seemed to take that well. And there we go. All right. The market seemed to take that well, and they finally broke out of that range. So Bank of Nova Manulife has done quite well for me. BNS, not so much. I think I'm up a little bit, but really just the dividend. But goeasy, GSY, has been a good one for me. There's going to be some volatility, but it's both a value and a growth play. And I would argue there's not that many in Canada. So Bibby says, wait, premium can be 10% on the value of so when I'm saying like these returns, this is on the amount at risk. So I'll give you an example. What's TD right now, just so we're talking about correct? Let's do Bank of Nova Scotia. Bank of Nova Scotia is at $77.80 right now. $77.80. Okay. I'm gonna say, okay, I feel okay about BNS, but I already have enough. So I don't want to put the strike price here where I would get more premium, but I also don't want to put it down here because nobody would pay me anything for it. So I'll put it somewhere in the middle and I'm going to say 76 bucks. Okay. So basically I'm saying I want to buy the stock. If it goes down at all, I don't mind getting it. Right. And so depending on this distance, basically that is one of the major determinants of what kind of premium I'm going to get. So I'm gonna get I can look. Okay, so for the one that's expiring January, which would be your 6 weeks, 44 days. And I'm going to sell a put, what did I say, 75? 76 I said. So that one will get me about $1, let's say $1 per share. So for the 100, I would get $100. So $100 divided by the 76. No, okay. Times 365, and then we're going to divide it by the 40. Are you just looking? Are you actually, okay, you want to go outside again? I've become a doorman for a puppy. And then we're going to divide it by the, okay, I screwed something up. 1 divided by 76 times 365, and then divided by 44 to annualize it. So that comes to about 11%. Okay, I get $1 per share for the option. The money at risk is $76 per share, right? That's what I have to come up with. All right, come in, dog. So I only get that $1, but I get it over 6 weeks, and I can do it 12 times a year. So that's why I multiplied it times 365, and then I divided it by 44 because that's the number of days to expiration. So yeah, $11 is, sorry, 11% annualized is what that comes out to. Now, if you get something that's more volatile, then that will pay you a higher premium. BNS, before they had their earnings announcement for the quarter, would have paid more because prior to earnings you get a higher volatility, therefore a higher premium because this stock, if it moves a lot, but if it doesn't move very much, then there's not that much chance of it dropping down or not as much, and therefore nobody will pay you that much for it. So it's this distance, volatility, and the amount of time that is left. Those are kind of the main three things. So that's what I was talking about. It is in double digits, right? It's basically twice the dividend, give or take. That completely unrelated. I'm just saying, if I'm holding Bank of Nova Scotia for the dividend, I'm amping up the dividend this way. Now, the bad thing that can happen is if the stock really drops, what is selling for this, I have to buy at this price. Now, if I were to buy the stock and it were to go down, I wouldn't sell it. I'm a long-term buy and hold. So that doesn't really bother me, but I do use it in my math. Like I track everything on a spreadsheet to make sure that I'm making money at this stuff. Because gamblers, and obviously I'm not a gambler, but gamblers always remember just the one big win and they forget about all of the losses. So I track things religiously. So Bibby says, I want to buy 100 shares at 78 minus X and I offer option for 76 bucks. Yeah. Yeah. If the value of the stock drops, the option can be exercised at any point by the buyer of the option. That's correct. Because I'm doing it 6 weeks out, like the earliest I've had an early exercise, and good for you for knowing about that. I don't think you're as junior maybe as some of the other folks. Um, the earliest I've been exercised was like 2 weeks early. The thing is, because of that intrinsic and extrinsic value of the option. And by the way, guys, you can ask me about stocks and personal finance, Canadian taxes, whatever. Bibby's just interested in options, so we're talking options. It can be exercised, but so let's say 6 weeks out, BNS drops to 75. That option is now in the money, meaning for a put, it is below the strike price. But there's a lot of time value left. So whatever the option is worth, a lot of it is still time value, and then some of it is this part, is basically $1 difference if it dropped if it dropped to 75 and the strike price was 76. So the option still has a lot of time value left. So generally they won't take you up on it, generally, because they would only get $100, right? 100 shares times the $1 below the strike price. They would only get $100 for it. But if the price dropped way down, then the time value sort of evaporates. It goes away. And so in that case, they might take me up on it. Or if there's a couple of weeks left, then I've been exercised early a couple of times when the share price dropped down. I think I sold an option. Which stock was it now? I think it was Toronto Dominion, and TD had is it TD? Anyways, sorry, BCE, Bell. I sold an option on Bell, and then they announced that Ziply acquisition, and the stock dropped a whole bunch more. So that one is going to expire third Friday of December. So that one has about 2 weeks left, and that one is way down here. So guaranteed, I'm going to get that one early. I'm pretty sure. So okay. If the value of the stock drops, the option can be exercised at any point. I talked about that. So the interval is not on the day of the expiry at any point. It's not on the day of the expiry at any point during. Yeah, I'm not sure if I understand that comment. Like I do it 6 weeks out, right? Like it's very regimented. I like rinse and repeat, find something that works and keep doing it. So it's 6 weeks out, 42 days, and time works in my favor, right? Especially if the shares have gone up, time is working for me, and that option is worth less. So if I decide I don't like the stock anymore for some reason and I want to get out of it, I can buy that option back. I never do that. I will take the stock or let it expire. Let the option expire worthless. I think out of hundreds of these transactions, I only bought it back twice. Bibi says I'm willing to give the floor to anyone else. Yeah, I just go in sequence, by the way. So I see Andrew is online there. To anyone else got more than my share of advice? Uh, I'm not just a technicality. I'm not giving advice. I'm neither licensed nor insured for financial advice. Just entertainment and education purposes, right? Um, I find options really interesting. I listened to a seminar on options have something called the Greeks. Theta is the time value. Delta is the rate of change. So the calculus, right? Is the rate of change of the option value uh, as the stock value changes. Today was on gamma, which is the rate of change of delta. So this is now like your second derivative again, those of you who took and remember calculus. So yeah, it's interesting. I'm not using most of the stuff like a lot of the stuff is pretty complicated. I just kind of found my own thing and I just do it. Andrew says, hey, bud. Sorry, I'm going to scroll. I've been following you for about a month and liking your videos. Well, I appreciate that. Ethan says, 4 years, Andrew. He's great. Thanks. I appreciate that. Ethan and I found each other on TikTok first and actually did some video calls and so on. So, Bibi says this is not advice, only a couple of people talking about interesting stuff. Exactly. I'm not taking this advice or my investments. Yeah, I mean, um, what financial advisors, when you go to a bank, what they do pretty much by law, if they don't want to get sued, is they need to do a KYC, know your client, and that basically they usually do it using 20 questions, multiple choice, and depending on how you answer, it gives you a score. And basically, it's when do you need the money back? If you need it back in a year, then you're going to be really conservative and not much volatility. If you need something back in 20 years, it's going to be all stock, all fairly high risk because risk and reward, as the cliche goes, are correlated. The higher the volatility, the higher the return. What all of us are looking for is for a given volatility, because I mean nobody likes their stocks tanking. Everybody likes volatility up, but nobody likes it down. So for a given rate of volatility, we're looking to maximize the return. There's like this curve. Anyway, and so number one is when do you need the money back? And the longer time frame you have, the riskier you can be. If you're a 20-year-old saving for retirement, then you're in technology, you're in small companies because they'll have a lot of volatility. But over time, they they will outperform pretty much anything else. If you're saving for a vacation in 6 months, then we're talking term deposits, right? I prefer 10 years, at worst 5 year time frame for you to be in stocks. And if it's 5 years, then it should be like large companies that don't have as much volatility. And um, so that's one. Number two is, are you able to handle volatility, both psychologically and financially? So if you're already pulling some money out, or if you're like, okay, if I lose 5%, I'm just gonna sell everything. Like that's gonna be it. Like this stuff is supposed to go up. It's not supposed to lose me money, right? And of course, luck is as soon as you invest, that's when you the next day you lose money. So that's kind of number two. And number three uh, is the psychology of it and just reality of needing the money. Um, some people are like, yeah, I don't care. I'm not going to look at it. Like I look at it and it like I know in the long run it's going to come out ahead. Okay. So it doesn't bother me. Other people need to lock themselves out of their trading accounts so they don't sell at the very bottom. Uh, like I know when the stock market is down 20%, that is a buying opportunity. But I also know people who freak out. So, you know, and then numero four is what kind of return do you need? So that's when you need a financial plan. What are your goals? Not just retirement, but maybe a house. You need to pay for the kids' college, etc. Um, and that's when you need to build out a plan, and you basically need to get what annual return do I need? Do I need 5%? Do I need 10%? Do I need 20%? If you need 20%, then you're looking at some really high risk stuff where yeah, you might make 20%, but you might also lose a bunch of money. So that's the thing. But if you need 5%, you get into some bonds which are relatively safe compared to stocks, and you get your 5%, and you don't have to watch your portfolio nosedive every couple of years. So anyways, I hope that helps as far as what your financial advisor giving advice should be doing for you. And my point, the reason I started talking about this is that I did not get that from everybody on this live. So I cannot give you advice. I can tell you what I do, but I'm a 51-year-old single man with a dog, newly acquired dog, um, and a net worth in multi-millions. So I have very different goals and financial circumstances than you do. So don't take what I do um, as something you should be necessarily doing. BB says a few years back, a financial advisor, I'm assuming at BNS, was trying to sell me on BNS proprietary mutual funds. Yeah, all the big banks have them, and showed me a chart that went up. Yeah, they do. I asked, what did the chart show? And he replied, I don't know. Let me see. Yeah, so I was saying earlier, if you want help, if you just have a financial advisor and you have some mutual funds and you don't really know what they're doing, and every time you walk into the financial advisor's office, they say, congratulations, you made 10% this year. What you can do is you can go on morningstar.ca, make sure if you have Canadian mutual funds that you're going on the Canadian version of Morningstar. And there's usually like a three letter, sometimes two letter, and then 3-digit, sometimes 4-digit code for a mutual fund. Type that into the search, get the information for that mutual fund, and it usually shows you, if you're a graphical person, three graphs. Okay, three lines on a graph. Um, the the red one is the index. That is kind of a benchmark. It is just a mathematical formula. So for a mutual fund that is investing in Canadian stocks, the Toronto Stock Exchange Index would be its benchmark. The blue line is the mutual fund itself. So ideally, the blue line, the mutual fund, should be above the red line. Okay, that way you're beating the index. Because if your mutual fund isn't beating the index, then what you can do is just buy a passive exchange traded fund ETF that just follows that index plus a tiny 0.2% fee annual, and you're basically able to get that index. Okay, and then the yellow line on that Morningstar chart is other mutual funds in that same category. So in my example, it would be Canadian stocks. You can get U.S. stocks. You can get international. There's like 100 of these different categories. So the yellow line is that. So what you're looking for is for blue to be higher than the index, than the red, and generally the index, the red, is higher than the yellow, because over a 10-year period, depending on the period and who you talk to, 50 to 80% of mutual funds underperform their benchmark, their index. People just got tired of it eventually, and they just buy the ETFs and they just call it a day. The other 20 to 50% of mutual funds, if you do a little bit of research and you keep a little bit of an eye on them, they will outperform the index and therefore the ETFs. People yell at me when I say that, and so I generally don't, but I do own quite a bit of mutual funds. My whole RRSP is mutual funds. They're do-it-yourselfers, meaning there's no financial advisor that will sell them to you because they would not get a commission, which their boss wouldn't like, or if they're independent, they wouldn't bring home the bacon. So I understand that, but they should be able to pick the 20% of the mutual funds that do outperform their index, and they should give you financial advice and not just be salespeople. Okay. Baby says, only when you educate yourself in finance, I realize bad financial advisors are for you. Yeah, I mean, financial advisors, and I did a YouTube video when there was like a CBC expose, but I mean, that expose, like everybody knows that or should know that, and they could have done it any time. And taking shots at big banks and their financial advisors is shooting fish in a barrel. I did a video about this, and I'm just like, don't be surprised. You are how the big banks make money. The fact that you make money is coincidental. They don't care, really, as long as you don't leave them. And so they make it still to this day. And the education and the disclosure has improved. But in all honesty, to this day, they still make it some sort of dark art. Nobody knows, and they're the only ones who can help you. And they sit in their suit in their behind their big desk. So yeah, if you trust people, like same with car mechanic, accountant, like don't implicitly trust people, or trust but verify. Was it Kevin O'Leary used to say, "In God I trust. Everybody else has to bring me data." So, like, if you ask them how is my BNS mutual fund, um, and they can't tell you, then it's like, well, what value are you adding? Because that mutual fund is getting at least 2%, if not more, each year out of your pocket. And I had a financial advisor look me in the eye and say, "You don't pay me." You and I know I do, one way or another. The money comes out of my pocket. The mutual fund company takes some. Your bank takes some. If they're the same bank, they get both sides of it. Um, Obviously, the financial advisor at the branch gets a salary. Um, Anyways, I think I beat that to death. Ethan says, I like your vid on TQQQ. I did it on TikTok. I think I put it on the shorts for YouTube as well, but it did. Surprised you liked it. Makes sense under the right circumstances. So TQQQ is following the NASDAQ 100 index. Somebody just said that they love it, and I'm just like, sure. But what it is, it's 3 times leverage. Okay. It's not actually done using borrowing, it's done using options. And what anything that is structured that way, um, it, 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 it people use the word in the comments, people use the word degrade, and that's not the right term. What it does is it goes away from the times 3 thing. It could do better or worse. Now, TQQQ has been on the market for 14 years, okay? Um, and it's done like 4,000 something total for those 14 years. And over the last 10 years, it's done 32%, 32% per year. Now, the triple Q over the last 10 years per year, I think has done 17. So it's not times 3. it still has done quite well, and there's been a multiplier, but basically it can stop following the times three. Like, so a lot of people will advocate do this for a short period of time, don't sit in it for ages. I'm like, well, if it's going to get me 32% a year, why not? I don't do any multiplier products. Um, like even the NASDAQ 100 would be excitement enough for me. I don't need it times two or times three, whatever it is. That one has a long history. It if the tracking sort of goes, and tracking is a specific term, I'm just going to use it for that, but it's when the index isn't followed perfectly. What we're talking about here is when the times three isn't followed perfectly. When people said when it goes against you, when it goes wrong, like it really goes wrong. Again, 10-year history, right? Or 14-year history, and 10 years it had a pretty good average. I would be wary of others that don't have that much of a history. It's probably wise not to sit in it for a decade, but that particular one has done okay. Again, not something I would do. Um, yeah. Bob says that's a great point. You're the source of returns for the big banks. Yeah, absolutely. That's how they make money. Um, it's not like it's not like you're getting a mortgage with them and they're you're paying them interest. That is one of the other ways they make money. Um, when you make a deposit, they either loan it out or they invest it themselves, and they make money that way as well when they invest it themselves. But if you're going into a bank branch and you say, I've got $10,000 here, I want to invest it, make my money grow because I want to buy a house in 5 years, whatever, they are going to put you into that bank's mutual funds. So that way they make both the advising side and the mutual fund side. And according to how you do on that 20 question, know your client, they're going to put you into a predefined portfolio. There's, you know, for question one, if you answered A, it adds +2. If you answered B, it adds +4. And then in the end, if your score is 150 to 170, I'm totally making this up, but that's how it works. If all those numbers added up to 150 to 170, they will put you into portfolio 6. And it's not like they'll say it's particularly for you, but they didn't put it together out of its components. There's a predefined portfolio that somebody much higher up in the organization vetted and verified that it's a decent combination of things that is right for somebody who answered the questions in such a way. And the financial advisor has to use that. It might be that their software actually just does it automatically. They don't have a chance to swap anything in or out. Okay. They might have a couple of, ESG, environmental, social, and governance portfolios where I don't want weapons, I don't want cigarettes, I don't want oil. Then it's like, well, then here's the two portfolios that we can put you into. Uh, and that's it. That's it. I had financial advisors who would once I would meet with them once a year. They would say, yeah, you did this much. They would just basically read me off the prospectus. This is what you own. I'm like, you don't know anything, really. And only later on did I know to ask, so how did the appropriate indexes for those mutual funds do? Because if you tell me I made 10% this year, some people just go, yay, and that's it. They walk out and they're like, oh, I don't have to meet them again for a year. I always look forward to my meetings. Everybody else, I think, just feels stupid. They don't know what they're talking about, and the financial advisor is able to use a couple of long words, and nobody questions them, right? But the follow-up, if they say you made 10%, I'm like, so what did the benchmarks do? They say, well, they did 15 on like, well, then you suck, right? Why am I in stuff that's underperforming the index? I could sell all this stuff off and buy ETFs that follow the indexes, and I would be 5% richer. So what are you're not picking good funds for me. You're not talking to me about my real estate investment properties because you didn't sell them to me, and you say that you're not licensed for them. Um, at the beginning, you asked me whether I need insurance and uh, whether I need a mortgage, but that was just because you were trying to make more money off of me and using me for leads. You We haven't looked at my budget. Are we going to talk about my budget? That so ideally that's what a financial advisor should do for you, because year after year they get, depending on a mutual fund, they get between 0.5% to 1% per year for ongoing financial advice off of the money that you have invested with them. And if they're not providing additional value and they're picking crappy mutual funds, or their bank is telling them to get you into crappy mutual funds, they're not adding any value and you could do better yourself. Okay. Baby says, very curious, why do you keep the mutual funds in your personal portfolio? Why not just switch to buying the US index? Are they returning more than the index plus fee? I do. I own one mutual fund which is in the U.S. And I have an ETF in my TFSA that follows the U.S. index. Um, uh, Listen, I'm gonna see if I can explain this. When I first started investing, they were basically the financial advisors like, what do you like, and do you want ups and downs? And I'm like, well, just make me as much money as possible, right? And that's not how investing works, because if he puts me into something that makes me 30% a year, there's going to be some minus 20 and minus 30% years as well. There's going to be a lot of ups and downs. So just something that will over time make me the most money might be okay for a 20-year-old, but it's not going to be okay for a 50-year-old. And so I know what you're getting at. The US index has outperformed most things. It is, to me, quite expensive. I've actually sold some of that US ETF in order to buy emerging markets in another ETF in my TFSA. The US market is theoretically overvalued, even compared to its own average. I think the price to earnings ratio, for those of you who are familiar, is I want to say 26, I think I heard, and the average I think is 16. So it is higher than its own average, and like emerging markets, I think are somewhere around 12, if that, and they're below their own average. So the U.S. market is overpriced. For now several years, there have been experts have been saying this is the year the U.S. market is going to underperform, and I think there was one, I want to say 2022, where the TSX beat. Um, TSX is keeping up with the S&P 500 pretty well this year, but basically, eventually there will be some regression back to the mean. You can't be overpriced forever. Um, so I'm diversifying. I personally believe that emerging markets, because of demographics, a young, growing population, poor population that is being pulled out of poverty and is going to be spending, are going to be where the growth is, while developed markets, generally the population is decreasing. Japan being an extreme example because they don't do immigration. Canada's population would be decreasing as well if it weren't for immigration. Same with the US. Um, Replacement rate is 2.2% is the birth rate per woman, and in the US without immigration, 1.3. So like people in developed markets aren't having babies. And it's really tough if you're a local company. Now, S&P 500 is multinationals, so that's sort of a different aspect of it as well. But if your population isn't growing, it's tough for you to make more money. And for the share price to go up and the PE to stay the same, for those of you who are familiar, you need profits to go up. And if you don't have more people to sell to, tough. So, so there's several reasons why I'm not plowing a huge amount of money into the US index. Just because it's made me the most money historically doesn't mean that it will continue to do that from this point on. And of course, you won't know until after the year is over. Um, so the other thing is the S&P 500 kicks off next to no dividends, and for tax efficiency um, at low income, which I'm not really anymore, but there's nothing more tax efficient in a non-registered account than Canadian eligible dividends. So let's say half my portfolio is Canadian companies which pay dividends, and then for everything else, I'm looking for capital gains. And I'm not avoiding dividend payers, but I just know that they're going to be taxed heavily. So for diversification and for just an investment thesis is why I'm not, $5 million in the S&P 500. Okay, I think I covered that one. Baby says, financial advisor says we achieved alpha with low beta, meaning low volatility. Usual client at the bank will not know, but it does sound fancy. Yeah. Yeah. I mean, ultimately, for a given level of risk, you want the highest alpha, highest return. So if you have something that doesn't have a lot of volatility, client can sleep at night and they still make a decent amount of money. I, I'm I always understood, and most studies bear this out, that in order to get returns, you need to take on some risk. And risk and return are correlated. Like BMO puts out these low volatility or smart beta ETFs where they claim that they outperform because of the low volatility. So I'm not quite sure whether there's a conflict there or whether we're just looking at different data, different study or whatever. But yeah, people won't know, and they won't know to compare it. And I'll tell you, because I'm pretty much up to date. A friend of mine, unfortunately, I think he's over 60 now. During the Great Recession in 2008, 2009, a financial advisor literally knocked at his door and he says, I can make you money, which after everything tanked, sure, yeah, absolutely, you can make money. So he got a home equity line of credit. He borrowed against his house. He invested $300,000, which still decent amount of money for him. It was everything because his house was his piggy bank. And sure enough, yeah, stocks or the mutual funds that he got took off. And then 5 years ago, maybe, I was on the phone with him and I'm like, yeah, can you give me the names and like the unique identifiers for some of these mutual funds? And he read them off to me. I'm just like, these things, yeah, they went up along with everything else at the beginning when you first bought them, but now they're underperforming, like they're crap. The reason you're in them is because they're paying high commissions. Look at the 3% annual MER, management expense ratio, that you're paying. He's like, I'm not paying it. Yeah, it's coming out of the share price of that mutual fund. Like you're paying it. You just don't see it for optics, right? The disclosures are becoming more uh, regulated. But back then, like he wasn't seeing anything. I'm like, look at the again blue line, red line, yellow line. Like you're way under the red line and actually even the yellow line. Um, like even like it's underperforming even other mutual funds. And he's like, oh yeah, yeah. I'm like, your financial advisor could get you into, and I just showed him some other advisor commission paying mutual funds. Like it wasn't even the do-it-yourselfers that I'm in. I'm like, you could get into this, and he's like, oh, okay, well, I don't know what to tell him. If I organize a phone call, will you jump? I'm like, absolutely, no phone call, no phone call. And later on, I'm just like, hey, like you could do this yourself. He's like, I like this guy. Like he's talking to my daughters about investing. I'm like, oh crap. I tried to talk to his daughters about investing and got absolutely nowhere. And like this guy's gonna have another generation of people to make commissions off of and underperform. Because financial advisors are stealing time. If they have you in crappy things, um, the like you time is when you're young is your biggest benefit, and they're stealing it from you if they have you in crappy things just so they can make money. But that is ultimately what they're doing, right? Like mechanic will try, hopefully ethically, but like they want to eat, they want to make a profit, they want to pay their workers, right? The ethics around these things, I got to tell you. Okay. I went off on a tangent. Ethan says, I had an advisor say they don't include rental estate in portfolio because it's considered too risky. I stopped listening after that. Yeah, they don't include it because they they're licensed for mutual funds and or insurance. They they won't talk to you, or they'll talk about it as just as an asset. It's like how much is it worth? How much cash flow does it kick off? And then how much do you own on it? Owe on it. Um, Real estate, I mean, generally is considered fairly low risk, right? Depends where you are, and I mean, if you're in the U.S. in 2008, then you might have a different opinion, but um, yeah. So I mean, they can't give you advice on it, but then like they need to look at all of your assets altogether. It's like, well, you're a conservative investor, so we're going to put you into low volatility mutual funds. But it's like, but three-quarters of my assets are in real estate, which is less risky. So you should actually be pumping up the risk on the mutual funds because my total portfolio is fairly low risk as it is. So like all of that stuff should be taken into consideration. But really they should sort of be your sober second thought. Um, like I cannot imagine phoning my financial advisor and say, hey, can I afford to buy a car? Can I afford to buy a boat? Can I afford to go on a vacation? But like they should be looking after um, your financial well-being and kind of be your second set of eyes. But the thing is, at the branch, they have 400 to 500 clients, each one with 20 to 50 thousand dollars with them, so they need to have that many. And like if you're getting 2 3 client visits per day, like how much are you going to dig into each client, right? It's a business. It's a business. Um, it is what it is. Okay, on to Fly Logan. I hope you're still on. 20,000 at 17. What could I do with it? If you so kind of a funny thing is everybody's telling me their age. Age helps, but it only helps if you're saving for retirement. If you're saving for a car, a vacation, house, or college, and you're going to need the money back in fairly short order, that really makes it different investments. But if you have at least 10 years, if you're saving for retirement and you have 40, then I would buy small caps, small companies. A few of them will, but as an index, there's something called a Russell 2000. There's going to be others. There's S&P 1000 as well to include some mid-sized companies. Russell 2000 index has small caps. So that will have a lot of volatility as a few of them go bankrupt and so on, but then you'll get the odd Amazon and the odd Google in there as well, and they're going to do awesome. So that would be one for me. Technology, not Kathy Wood's ARK funds. Those are total speculations, and a lot of them are just not going to do anything. But something like the Nasdaq 100, only about 50% of it's technology, but it is technology heavy from that perspective. Um, but you have to be aware that you do have to give it that time frame because it's going to go up and down. So if in 5 years it's like, oh, I want to buy a house, if you're lucky, it'll be on an upswing. You can sell it, use it for down payment, no problem. If you're unlucky and you catch it on a downswing, okay, then you don't get to buy as much of a house as you thought you would. So I would, as soon as you're like, okay, we're going to be using that for a house, then you need to start cycling out of that super high risk volatility stuff into something, you know, maybe go from the Nasdaq 100, go to the S&P 500, and maybe into some more conservative stuff. It won't it won't have the fluctuations, but it also won't have the long-term performance. So if you change your mind after that and you're like, oh, I don't want to buy a house anymore, then you need to cycle back into the long-term stuff. I hope that helps. Um, just in general, I guess, right? Baby says markets can stay irrational longer than you can stay solvent, I think is the quote. Um, I want to say Ben Graham, but I could be wrong. I'm sure it's an easy Google. The quote is markets can stay irrational longer than you can stay solvent. Just for fun. Markets can stay irrational longer, quote. John Maynard Keynes, an economist, said markets can remain irrational longer than you can remain solvent. So that was Keynes. I studied him in Econ 102 many years ago. Bibi says, I have to say, nuts of steel borrow against your house in 2008, put it all in the market. So like my personal approach, and it's not generally suggested to do it this way. You're supposed to have 3 to 6 months of emergency cash if you lose your job or car breaks down, whatever. And then some people will carry an opportunity fund in cash. The cash will underperform in the long run compared to stocks, but if stocks tank, then that's great because then cash is king at that point. So I don't do that. I want to be fully invested at all times because I have dividends coming in, and I can always borrow against the home equity line of credit on this sumptuous palace. In 2008, I started buying real estate in the US. The first one I bought, well, I bought all of them for cash, but the first one I actually had about 100 grand in cash. I think my mother lent me some. And then the second, the third, and the fourth, I got first a HELOC on the house where I was living in at the time. And then once I was done buying, because they became pain in the behind, and I'm like, okay, I'm gonna flip the HELOC to a mortgage to get a lower interest rate and start paying the sucker off. Um, for real estate, obviously, it was the real estate that crashed and caused the subsequent stock market crash as well. And like people always need somewhere to live, right? I mean, companies don't go bankrupt on the stock market very often either, even though I was the proud holder of one that did go bankrupt and the stock delisted, it was gone. Um, yeah, so I started buying those. The other thing is in 2018, I borrowed, there was like a pullback about 20%. And I sort of made it my thesis, policy that if the market drops more than 20% from a recent high, meaning a bear market, I will start borrowing to invest. The lovely thing about HELOCs is that you don't pay any interest until you pull the money out and use it. And so during COVID in 2020, I up to the hilt. I borrowed and invested. The other reason I was able to do that is that at that point, now 10 years after buying the US houses, I was selling them one per year. So I knew that if I maxed out the HELOC, that I would be able to pay it off fairly quickly by selling a house in the US. So it wasn't that risky for me in terms of staying solvent. So yeah, I don't carry cash, and I will borrow against the HELOC. Now my portfolio is about, like, my liquid portfolio is about 5 million and change, maybe 5.5. And I got a HELOC on this place for 300,000. So if the market tanks, my portfolio is going to look ugly for a while, and the only way I can take advantage of it is to borrow less than 10% of the initial amount. The you know 300,000 is less than 10% of the 5 mil, and take advantage of it that way. So if the market drops 20%, it could drop down some more, 25%. And during COVID, I'm like, all right, well, either the world's going to end and it's all going to be, Mad Max Beyond Thunderdome kind of stuff, or everything's going to go back to normal, and I'll pay off the loan. So I made myself a shopping list, and I'm like, okay, I got this much money available. I'm going to buy Royal Bank 3 times. I'm going to buy Bank of Nova Scotia 3 times. So dropping down, 20% down. Okay, first group of buying, and it kept going down. Second group of buying, then it bottomed. I timed it completely by coincidence, perfectly. I mean, it could have gone down 40%. That's a lot. That's a lot. Even 20% is a lot. It happens once every 5 years, give or take. Um, and then it started recovering, bought the third group, and that was it. So, I don't know about balls of steel. Like, I know it's going to recover. I've got dividends coming in that are going to keep paying the interest on the HELOC. I don't really see that much of a problem with it. Obviously, if things go wrong, I could sell something. It would suck to be selling something after it's gone down, but you do what you have to do. But it's never come to that. Um, Baby says my 2008 comment was related to your friend invested with the advisor. Oh yeah, 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 yeah. I, you know what? All of my friends know I'm knowledgeable in investing in personal finance. Some of them only use me for that, and I never hear from them unless they want me to go over their portfolio. And others, I the friend I'm talking about probably still works in a warehouse, cutting metal, and he never talked to me about it, never consulted me, nothing. And another friend who works construction, he opened up a TFSA, just went to an advisor who put him into a TFSA, where in his tax bracket he would have benefited a lot more from an RSP. What are you going to do? So my point is, Bibi, I just think uh, he didn't know to be scared, maybe, or he just believed the guys. Like, yeah, he looked me in the eye, he shook my hand. Um, he said he would make me money that from here on out it's only going to go up. Didn't have to. Depends on the timing, right? Bibi says somehow recessions are more mild since the governments are willing to pour huge amount of cash, stop the downfall. Yeah, central banks will cut the interest rates. That's a big one. Governments will spend and spend to get reelected, which is selfish and short-sighted. Um, if if they were intelligently allocating money, they could stimulate the economy, they could slow down the economy, and so on. They have a different goal than the central bank. I fairly frequently, I remember in Canada it happened, but it happens quite a bit, that the central bank is increasing interest rates, trying to slow down inflation and slow down the economy. It's slow down inflation, and the government is spending more. Never mind a balanced budget. Nobody seems to be worried about, uh, never mind paying off the loan, but like in the US, like even balancing the budget, not having a deficit. And like eventually it will bite them and bite us because we're in the very same boat. But it's just the government wants to get reelected, wants to keep the people happy. For people to be happy, they want stuff, and they need to keep getting whatever social benefits that they're supposed to get, and they don't care that their kids are going to be paying it off, or saddled with it more likely because nobody's ever going to pay it off. Anyways, and Baby says, why are you borrowing against your house and not your portfolio? Yeah, that's a good point. The the margin account in my Interactive Brokers is actually lower interest rate than the HELOC. So when I bought this house on my margin account in my Interactive Brokers because the house was like 430 something. So it wasn't even maxed out, and it was like 2 percentage points lower. But until I got Interactive Brokers, home equity line of credit is the cheapest, right? Because it is covered by real estate rather than theoretically unsecured. But yeah, Interactive Brokers has that advantage. I like Interactive Brokers for three things: cheap margin rates, super low commissions on options. And so that's where I do the options stuff we talked about. And they're good with exchange rates. Like they won't take 2%, they'll charge you $2 and they will give you the true rate. So whenever I sold a US house, I would I would run it through Interactive Brokers, and that's usually where the loan was as well. The HELOC is easier to access. It doesn't take a couple of days for the money to come across, but for something significant, I would definitely use Interactive Brokers. When I first opened Interactive Brokers and transferred everything over, I actually paid off my HELOC from Interactive Brokers. There was the whole margin call where there was a bit of a pullback in the market, and they're like, you either need to give us cash, sell something, or transfer money back in, or we're going to start selling stuff for you. And I'm like, well, okay, money's coming back out of money's coming out of the HELOC now, which I had paid off, and going into Interactive Brokers. So pluses and minuses, but yeah, over a long period of time, using the margin account. But then you look at like Qtrade, which has a much higher interest rate. So everybody does it a little bit differently. And then BB says, I was not aware you can take money out of IBKR. I thought you can only use the margin to buy more equities. Very interesting. Yeah, I had somebody a couple of months ago say the same thing. Yeah, you just transfer cash out. Like if I get dividends and I don't have any margin debt, I transfer the cash out. Margin is exactly the same thing. But as soon as the transfer happens, I haven't received the money in my checking account yet, and they start charging interest. But I like having access to stuff that's not costing me if I'm not using it. Like a mortgage, they're charging you interest. But a HELOC, it sits there nice and ready. Same with a margin account if I need it. So I do like that stuff. So anyways, good questions. I do a live on TikTok every second Wednesday as well, and because I've been doing TikTok lives longer, there's way more people on them, and I get behind in the questions, and I find that very stressful. There's 3 people on, so it's not stressful. So I actually enjoy these quite a bit more, and but yeah, so I'll do another one in a couple of weeks. Guess that'll be the 18th, so that won't be the one canceled because of Christmas. But you can join on the TikTok one next week, next Wednesday. I start at 6 p.m. Pacific, 7 Mountain, which is where I am, or 9 Eastern. But I'm on the TikTok ones at least 3 hours, and as long as people are asking questions. So BB says, IBKR is incomprehensible as a UI. I use them more on Instinct than Clean UI. Yeah, I've got 3 brokerages. I've got Qtrade, which I started with, high fees. Like if I started even with options with them, and if I ever got assigned a stock, the minimum they charged was $40 when I got assigned. And when I sold, it was like $6.95 plus $1.50 per contract. And I was talking to the team lead of their customer service because they're buggy, and like they really need to work on the Qtrade site. And I'm just like, yeah, I'm moving stuff over to Wealthsimple, which is my second brokerage, and then I was moving stuff over to Interactive Brokers. I'm like, their options are just way cheaper. And he's like, yeah, I guess everybody makes money different ways, but I like Qtrade because they have research, like Morningstar and Desjardins research, and Morningstar is good. Yeah, you get what you pay for. Wealthsimple has absolutely nothing. If I only had Wealthsimple, I'd be looking at Yahoo Finance or Yahoo Finance Canada, I guess, for stuff. They've got nothing, simple interface. I like Wealthsimple because they got different products like private lending and private equity, kind of a mutual fund thing where they do the choosing. So I like them for that. But as far as research or even sophistication of interface, it's simple and it's clean. Interactive Brokers, I sort of gotten used to. I don't use them, like if nobody did today, but if somebody said, hey, what do you think of Microsoft? Like I would look it up in Qtrade. I wouldn't look it up in Interactive Brokers. So anyways, plus I dislike that Interactive Brokers, they text my phone, with the two-step authentication. I just find that annoying. Um, Interactive Brokers does it every time. Wealthsimple and Qtrade do it once per month, so that I'm willing to stomach. But and then you don't touch it for 10 minutes, it logs you out, and you have to do it again. BB says, Wealthsimple will add margin account soon. They already have. I opened one up. I just need to transfer stuff out of my non-registered non-margin into my non-registered margin. I was actually going to do that tonight. They sent me the steps that I have to take. But I'm gonna walk a very sleepy puppy. She hates going out in the cold. Today I ordered her booties. I already got her like a vest, and the booties will arrive hopefully in a week, so she can go out in the snow without lifting a paw. It's like it's cold. Um, yeah, Wealthsimple also does options already. I think they're a little bit more expensive than Interactive Brokers, but they're probably going to have a very simplistic interface. Interactive Brokers for options, like you can do multi-leg options, which is cool. Like you can select more than one and make yourself a condor, which I'm not going to get into, but nor have I done it. But the fact is kind of cool that they're fairly sophisticated, but the interface is non-intuitive. I'm completely with you on that one. Aman says, hello, happy to see you here. Well, likewise. Let me know if I can help. Got 5 people on. If I've been on for an hour and a half, so it's actually an early evening for me. I was saying earlier, I'm usually on for at least 3 hours in the TikTok ones, and 30 messages behind, and people asking me, are you just answering like random questions, or like what are you doing? Like I'm just solid 30 minutes behind. I hope everybody's hanging out, getting their questions answered. Anyway, so if I can help with anything, look up stocks, how to get to financial independence. Why don't I talk about that for a second, and if nothing shows up, I'll call it a night and go walk the puppy. But you know what? Like financial independence or reaching your financial goals, it's not complicated. It's pretty simple. It's not always easy. You need to have dedication. You need to have a goal. Um, and if you uh, it's like, yeah, I'm going to invest every month, and it's like, well, I want to go on a weekend getaway next time. Oh, I've got a birthday party to attend, and like each month nothing gets invested. You're having your fun now. You're not going to have fun when you're 60 or 70, if that's what you were saving for. If you start up a TFSA and it's going good, and it's like, well, we want to take the whole family on a vacation. We don't want to put it on a credit card because we won't be able to pay it off at the end of the month. So money's coming out of the TFSA, and that stops the compounding. And so it's always dedication, what your goals are, what you want from your life. And except for the very first gentleman who was 12, um, we're all adults. And so you're making decisions. And if you have no self-control, the thing is where you put a piece of candy in front of a child, a young child usually, and you say, if you don't eat that before I come back, I'm going to give you a second one, and you can have two. And 3-year-old, 4-year-olds will eat the piece of candy before the researcher comes back. That was one reason I wanted to have kids, was so I could run these experiments on them. Anyways, um, so I have a feeling that most North American adults would still eat the candy before the researcher came back. Like just lack of control. Now me, I hated my job, so I got to get out of here. Like I can't do this for until I'm 50, let alone 60 or 65. Um, And so, like at the end, I was contracting, I had a corporation, so I was taxed very lightly. And I was putting away 85%. I kid you not. I made 200K contracting, another 50 from dividends and uh, the rents still from the US houses. And I was living on 30 grand a year because I really needed to quit. And you feel a lot better once you sort of get to a certain point and you're like, if I quit now, I could make this work. Like it's quite liberating. Still makes you want to get out, but at least now you know you can. Um, while I think a lot of people feel trapped in their jobs. Anyways, um, but you can get out of it. It doesn't matter how much money you're making, actually, because if you're making less, it's likely you're living on less. And if you're living beyond your means, well, then you're enjoying your life now, right? Decisions have been made, as the saying goes. Anyways, Aman, I know you typed this in about 5 minutes ago, but I was on a roll. Uh, I am planning on withdrawing cash from WB, have all cash in USD. They don't allow Norbert's Gambit any other way to save on conversion there. Um, they don't allow Norbert's Gambit. Like if they have a Canadian dollar portfolio and a US dollar portfolio, and they allow transfers between. Okay. Yeah, I mean, you might be able to wire the money to, like, there are actual foreign exchange offices and I don't want to call them foreign exchangers, but there are people who do that, and they'll give you somewhat of a better rate. They'll still take something. Either that, if it's enough money, you could look for one that charges you a dollar commission rather than a percentage. Um, Other than that, like I said, Interactive Brokers are quite good with that. Um, they give you the true rate and just charge you a $2 fee, which I think is amazing. Like even if I was exchanging $1,000, it would still be worth it. Um, because like Wealthsimple charges you 1.5%, right? So that'd be $15. My bank and Qtrade charge 2%, give or take. There's always a spread between the buy and the sell. Like all banks do it. Okay, scroll. Ooh, I'm becoming popular all of a sudden. So that was that. Santerra says, "What's your view on SIP for VFV and XQQ via account? I'm international student, so not sure if we'll be in Canada after 2026. Do you think it's a good approach?" What's XQQ? Is that would be the that'd be the Nasdaq 100 again. Let me just double check. XQQ. Yeah, Canadian hedged. Um, yeah, VFV is S&P 500. So I mean, you're covering the US pretty well with the S&P 500 and the Nasdaq. If I wanted to only stay in the US, that would kind of be the two. Yeah, I don't see any problem with that. Not sure if I'll be in Canada after 2026. Um, I I don't know enough about what will happen once you stop being a resident in Canada, whether that will get taxed where you end up or not, obviously. Um, but as far as investing while you're a resident in Canada, you'll have to pay you'll have to pay Canadian taxes on any gains from that. So but as far as especially if you're a student and you have at least 5 years, 10 would be better. Then those are going to do fine for you. Amount says they allow transfer between USD to CAD, but it's all so they charge 1.5% that way. Okay, so they've they've hooked on to doing Norbert's Gambit. Okay. In Questrade, it's only $60 Norbert's Gambit. You can exchange as much money as you want, I would imagine. Yeah, when I did Norbert's in, no point doing it in Interactive Brokers. Like I said, they give you the true rate. When I did Norbert's Gambit a couple of times in Qtrade, and I bought a DLR ETF. I bought the .UN. Don't fall off. And then just transferred it over to the other account, and it automatically converted it to a .U. It took a few days to settle all those transactions, the transfer in, the purchase, then the transfer over, and then sale, and then so like it took better part of 2 weeks for the whole thing to happen, which kind of sucked. Depends which way the currencies were moving. It could have actually worked out in my favor. And but there weren't any additional charges, so I just paid the $6.95 for the purchase and then $6.95 for the sale of the other one. But it knew enough to convert it from .UN to .U, or going the other way from .U to .UN, to get the appropriate currency, and they didn't charge anything there. So each brokerage has its own thing, just like all banks. Each bank does its own thing. Like they all end up making the same amount of money generally. It's just what do they charge you for, and what they don't charge you for, right? I find moving from one brokerage to another, or from one bank to another, just like moving relationships. You make sure that whatever you hated in the previous girlfriend or boyfriend, depending, whatever you hated in that previous relationship, isn't present in the next one, and you'll find the right brokerage and the right bank that isn't charging you for whatever you hated being charged for, and then they're charging you for something else that you didn't even think to ask, that you didn't think was important, because the previous one wasn't charging for that, if that all makes sense. Okay, that was fascinating. SIP monthly will be 750 or 7,500 divided by 12 and equally divided between XQQ. Yeah, sounds good to me. Remember, NASDAQ is a brokerage, is a stock exchange. The S&P 500, and okay, NASDAQ is a stock exchange. NASDAQ 100 is an index covering stuff on the NASDAQ stock exchange. S&P 500 is an index that covers American stocks, whether they're on New York Stock Exchange or on the NASDAQ. So like Tesla is in the S&P 500, but it is trading on the NASDAQ. Okay, so you might have some overlap. You seem to like your US stuff. It's all good. I was going on earlier about emerging markets kind of being where I would see the growth eventually. I've been saying that for 10 years, and it definitely hasn't. And I've been buying more and more, and it's gone up 1% a year. It's not the majority of my portfolio, but the higher demographics, young working population that's growing, and people being pulled out of poverty, I think that's where the opportunities are. Also, having traveled to Southeast Asia, they use manpower for everything, and all it takes is a tiny bit of technology. While in the developed markets, they've run as much out of technology as they can. Obviously, AI, new things come in all the time, robotics. So they keep finding ways to get more. But like I witnessed a huge field and women with sickles mowing the lawn. Like you could run a riding lawnmower, combine, to do this feel like what is happening, but labor is so cheap um, that all they need to do is find use for that labor and replace a tiny bit of that labor with technology because the returns on investment at the beginning, there's this sort of an S curve, at the beginning are huge. You put a little bit of money in and you get, like I said, stupid riding lawnmower will replace 10 workers. Now, as long as the economy is running and those 10 workers have better places to put their time. Anyways, my point is, arguably, US is overpriced, but it's been overpriced for a long time and it keeps grinding upwards. For me, just long-term demographically, emerging markets is where I think the growth is going to be. So, but you've San, you've come up with your strategy. It's good, it sounds good to me. Aman says, but Wealthsimple is gonna charge me a bank. I'm planning on changing 300K. Yeah, they'll charge you that 1.5%. If you pay them $10 a month, or if you have over $500,000 with them, they will charge it to you only once. So convert CAD to US, and then they keep the US separate. So you can buy US stocks, sell US stocks, and they don't charge you the 1.5% again until you're ready to sell the US and you want Canadian dollars, and they'll charge you the 1.5 again. If you don't have the special plan, the $10 a month or the $500,000 with them, then they'll charge you 1.5% each time. And Wealthsimple, because they wouldn't support Norbert's then. Because their accounts are sort of all in one. And they would charge you 1.5% to put the money in. Yeah, what I was using was there's an ETF that's actually named Dollar, so DLT. DLT? No. DLR? It's been a few years. DLT. Okay, I can't find it now. But it's one that has the Canadian version, and it has a US version, a .un and .u. I'm not sure how Wealthsimple would deal with that. Maybe do the Interactive Brokers thing. Be careful, you have to wire them the money, by the way. Otherwise, it takes ages for it to clear. Make sure whatever you're doing that it's like pay $40 for 300,000, pay $40 to wire the money if you're going to use Interactive Brokers. Questrade should be able to help you as well. Yeah, they'll charge you $4,500 for if it's 1.5%. I don't think Wealthsimple will do it at all, now that I'm thinking of it. Because Wealthsimple is Canadian. You can play with US stocks and have US dollars in the account if you're paying that $10. But ultimately, to get money out, it becomes Canadian. Like I don't think you can transfer in US dollars. At least I haven't tried. So yeah, talk to them. They should be able to do something for you, but I'll bet you they'll charge you at least 1.5%. Make sure they don't charge you 3, which would suck. So yeah, I wouldn't use Wealthsimple for that. I don't think they can do it. I mean, they sort of told you. Amon says, even Canadian banks here, once you withdraw in USDs, they charge decent conversion fees, changing it to CAD. Yeah, yeah, they do. That's how they make money. So try a money changer, like I said earlier. I can't really think of anything else. Like my bank, if I or credit union, I guess, right? If I have US dollars, there's a different rate if I'm selling it versus if I have Canadian dollars and I'm buying US dollars. The exchange rate is in the middle, like whatever it is, like 1.37 right now is the true exchange rate. So if I'm buying it, they'll charge me 1.39, and if I'm selling it, they'll give me 1.35, and the true rate is in the middle at 1.37. That's how they make their money, right? In my example, it's not quite 2%, so it might be 1.4 and 1.34, and 1.37 is the true rate. Amon says, have you moved to Edmonton already? I have. Yeah, in June. Last I remember you were planning on moving to Alberta. Yeah. Pulled the trigger on it. Enjoyed the summer, which was hot, and now it's cold. 2 weeks ago, got myself a dog. Still sleeping with her on a foam, not even a mattress, just a piece of foam in the kitchen because she still can't hold her bladder the whole night. So I let her out of the patio, and I'm working off of a laptop here on the dining room table instead of being in the office where I was before. She sleeps long enough so I can work out, but I can't go running, and she attacks me when I do yoga because she thinks we're playing. So definitely had a change of life, but I sort of had my life plan a little bit. It was like quit working, sell the U.S. houses because they were annoying and they had appreciated a lot, and I couldn't travel. Sold the last house in 2023 in like January or February. Did my 3 month traveling to the Far East at the end of 2023 when I was still in a condo. Sold the condo, bought a house, bought the dog. So did the traveling while I was in a condo before I had a dog. And so my plan has come to fruition, for better or for worse. I'm going to try one winter without a car in Edmonton. So far, so good. Except when I go grocery shopping, she's very upset when I lock her in the bathroom. But there's tons of bike trails, and they clear them. So not that bad biking. I am the only one biking in the snow, but I did a little bit in Vancouver. But I mean, in Vancouver doesn't snow. Amon says, sweet, I can tell the background has changed. Yeah, so this is the living room, or I guess dining room. No, you won't be able to see anything. My living room has a 17-foot ceiling, basically both stories. And then there's also a basement where there's a media room, which I'm going to put all together, and I've got a really nice gym. I'm definitely not going to be going to a public gym here. So, right, Whitehorse, right. Yeah. Well, we had -20 here, so it's not that bad because it's dry, but the dog doesn't want to go outside, and I don't know. I didn't really have anywhere to go before when I was in Vancouver. I definitely don't have anywhere to go now. Bibi says, somehow I imagine when I will reach several million portfolio, I will get a Ford Raptor, not biking. Yeah, that's just me. I have trouble spending money. Um, it's actually a fairly common problem. You'd be surprised. Uh, Somebody else asked me. I did a YouTube video about it. Um, it's like, so. First of all, I was born in Prague in the Czech Republic, um, and we moved to Canada in the '80s when I was 9, and like my mother especially very frugal, and I just don't. Uh, I I was always kind of used to like going blueberry picking, not really going anywhere on vacations, and like my dad made $60 a day blueberry picking, and I made 20, and I bought Dungeons and Dragons books and stuff like that, and instead of getting them as presents or being just getting an allowance and stuff like that. Um, so I've always been very frugal, and when I had a goal of not working anymore, and I got to tell you, every day when I go out during the day, sunny or snowy, I thank the gods that it's like I don't have to go to work. At the beginning, I was missing out a little bit, like, geez, like I could have made $800 today working, like what, and then it's like I'm never gonna beat Warren Buffett. So, like in terms of net worth, I don't need any more. I'm perfectly fine. So, the the car thing, I haven't had access to a car since like 2009 when my ex left and she took her car with her, and it was a Dodge Neon at that point. Um, I don't like how expensive cars are and how expensive everything is about cars. Bikes I can fix myself, or worst comes to worst, I'll go to a garage sale and I'll buy one for $50. I bought one for 20 for spare parts, no problem. Um, but with cars, like for a mechanic to even take a look at it, it's in the hundreds, if not thousands. Um, yeah, maybe there's some aspect to being environmentally friendly, but I mean, electric cars I don't think are that much friendlier anyway. By the time you get through all the different chemicals and materials that are gathered the world over, uh, plus Tesla, anything electric, I think in the cold. I've seen a few around here. I've never asked them how's your performance, but I don't think in the cold it would do very well. Friend of mine in Vancouver has a Tesla, and like in the car we were wearing jackets and mittens because he wouldn't turn on the heat because he's like the battery goes like this. I don't know. His Tesla's brand new, so I don't know. Anyways, um, I like being self-sufficient. I on some level I'm sort of the class clown, the kid acting out, but in a different way, and at 51. So, but I like being self-sufficient. I was gonna try it. Like since 2009, I was without access to a car, and I seem to make it work. I'm near several buses, and I'm pretty close to the end of the. I'm in the Northeast, close to the end of the train. So like I would go for the Edmonton Investing Club, which I sort of started, and we would hang out, and then I'm biking back along the train tracks, and a train goes by, and all these warm and fairly happy people on the train, and I'm biking in the cold, and I'm like, meh. So everybody's kind of got their thing. Yeah. Anyways, Andrew says isn't sketchy in Edmonton. I guess it depends where you go. When in the summer when I went garage sailing and I kind of went to the downtownish area, it's like, yeah, but I not that I go for the look, but when I'm biking around, I kind of look homeless, so nobody really bothers me. When I lived in Surrey, I lived near the SkyTrain. Those of you who know, and I was like downtown Surrey, and there were tons of homeless people around. Never did I feel any sort of danger. I know transit can be a little stabby in Edmonton. I don't know. I'm tall. I'm hoping somebody isn't gonna try to pick on me or rob me or something, but I haven't been on transit yet. I even gotten a pass, which I really should. Um, yeah, the Ford Raptor, I don't know. If I were to get a car, I think it would just be some Toyota or Honda or something reliable. Um, the thing is, in my garage right now, I have like three working bikes and then the one I bought for parts. So like if one has a problem, I'm moving on to the next. Um, with a car, like you're stuck. And then it's going to be so much money and so on. I don't, yeah, the winter part, there's a lot of salt, so we'll see how the bike reacts to that. But anyways, oh, baby, you're from Romania. Okay, cool. Yeah, the whole Eastern European thing. It's a different, maybe different mentality. I don't know. Okay, Stuart, sorry to keep you waiting. Hello, enjoying the video. What are your thoughts on Tesla? I'm not a Tesla fan. I'm a value. Okay. God, the search on Keytrade. Jeez. I'm a value investor. I like stuff that's cheap and ideally pays dividends. And Tesla still has this built-in, it's going to be amazing vibe. And it has a PE ratio of 96. You're paying $96 when you buy a share for $1 of profits. And that's just like I'm okay kind of 10 to 20 for that's sort of where the financials and the oil companies live. Um, if it's a tech stock like Microsoft, Google, I'm good if you're in the 30s, maybe even the 40s. Once Nvidia got into the 40s, I sold it, obviously a little prematurely. But I personally dislike Elon, never having met him. He's just a loose cannon, and he's doing way too many things, and the whole Trump thing recently has been a bonus. Um, so yeah, you can certainly make money at it. It's just overpriced. It's going to have a lot of volatility as well, and hi baby, it's going to have a lot of volatility because it's trading on sentiment, and uh, you know, uh, just the whole thing basically hinges on the oracle of Elon, and I don't really want that sort of dependence. They're profitable, God bless, but I own GM and Ford and BMW, which are single digit PE, so I feel far more comfortable with that. So it's yeah, it wouldn't be my thing. Um, you heading outside? All right. Baby says, please make me a promise once you reach what, 10 million, please don't take the bus anymore. If I ever see you in a bus station, I'll stop and tell people who you are. Yeah, fair enough. I've gotten better. Now, I know that's all very relative, but like for food, I've been buying better things. Um, the dog, I mean, I got her at the Humane Society and no, but I'm buying her better food. I think I'm buying really good food for myself. Okay, hold on. She's she's eyeing something outside. Come on, Goosey. Come on, babe. Oh yeah. All right. Um, I bought lots of stuff when I moved, I bought myself a sauna used. I bought myself a great weight machine, which I'm really happy with, used. Um, you know, uh, the funny thing is, like I had a 60-inch TV back in Surrey in Vancouver, but it was rear projection and it was old. It worked. I replaced the lamp and I gave that away to a neighbor. And I'm like, I'm gonna pay a couple of grand for a TV here in Edmonton, and put that in my media room. I've got a great receiver. I've got great speakers, which I bought when I was working for Future Shop. For those of you who remember, Future Shop Best Buy, um, and I was working there, so I got the employee discount. Got really nice small compact speakers. So hopefully they still work. Well, I was going to set them up, but just the TV I didn't want to haul. Um, you were just out there, dog. So uh, and I ended up, instead of a 60-inch flat screen TV, I saw a 46-inch TV at a garage sale, had it delivered, and for $40, I got a 46-inch TV, and we're done. I can't help myself in some cases. Um, yeah, so like I bought stuff I had to, um, but like I've Jesus. You you don't want to go outside. Can you sit on my lap there? Oh, oh, she's getting heavier and heavier. Oh, hey babe, say hi to the internet. Mwah. She's like, I don't want to be here. Fat berry. Um, yeah, I've really decided I dislike travel. I also do it on the cheap, which is probably one of the reasons I dislike it. But just like so much logistics to get somewhere, and then all the temples look the same. And I'm not a beach person whatsoever, so I can't spend money on travel. The car is TBD, so I don't know. Um, I'm not sure what I'm gonna do, but no, maybe some nice charity in 30, 40 years is gonna come out ahead. Um, the whole thing about me kind of looking like a homeless person when you're saying, BB, about seeing me on the bus. You know how people hold up signs saying we'll work for we'll work for food. I should have a sign. We'll teach investing for food. Anyways, 8-cylinder, 6-speed. Wow, that sounds engine related. Would you want Canada to be split into an equal amount of blue and red states and have them all admitted to the US? Uh, I think we're distinct. I don't think we need to be part of the US. They're hardly aware of us. Alberta would definitely be a red state. BC would be a blue state. The others, yeah. Ontario, I would say, would be blue. The Prairie's probably red. Eh. Um, I don't think I want to be an American. They're loud. whenever, whenever I see somebody really loud, I'm like, Americans. Whenever I was traveling. BB says, keeping with your theme, Ford Raptor used. Well, there you go. Like buying a new car, like unless you live for cars and you live for the new car smell, like you are paying for the depreciation. You're supposed to buy a 3 to 5 year old car for cash. Like the um, the dealerships make more money off of the financing than they do off the actual vehicles. Um, I would try to buy it private, take it to a mechanic, have it checked out. So yeah, that's what you're supposed to do. Benjamin says you're from the States. Well, welcome to Canadian Money Talk. Sorry, Americans worldwide are loud. I remember, for those of you who are familiar with Vancouver, on Whistler Mountain, there's they have this enclosure, like big enclosure, and there's two giant grizzly bears. They were, I think, orphaned as cubs, and they raised them. Like, they're 700 pounds, and like all these people, some of them who climbed up the mountain, most of them, I guess, took a tram. They climbed up the mountain, and they're looking at these majestic animals, whispering. And there's an American family, fat, two boys, two teenage boys, and I guess the father. San Francisco, like Americans, and they're just talking so loud, and I'm just like, Jesus Christ, like look at these amazing animals, and like we're in their habitat, and you're disturbing them. I don't know. Bibi says you're also paying for the depreciation on a puppy, but look at how much joy it brings. It's true. Yeah. That's because I'm saving on a girlfriend. Because the dogs have the same psychological effect as if you have a family, and I'm single and by myself. So that's why I got the dog. And I don't have to finance a significant other. Andrew says, how much did you pay to buy your home in Edmonton? 430 something, 432, 30, something like that. For the home equity line of credit, interestingly enough, it got valued at 450. I thought it would actually be that I had overpaid. It turns out that I underpaid a little bit. My condo, 1,017 square feet in the bad part of Surrey, British Columbia, sold for 559. About 20-30 grand went to the realtor and closing costs and all that. So I had an extra 100,000 from the sale of the condo to have a standalone house, nobody stomping on my head, nobody yelling in the lobby, and no arguments with the Strata Council. And I had some arguments with the Strata Council. The only difference is I get a little cold, and I'm told in February it'll get worse. So whenever it's cold today, it's like it's gonna get worse. But when the dog gets old enough, I'll resume jogging, which I'm looking forward to, even in the snow. It's all good. I've got hours and hours of TV to watch, and I've got dozens, if not hundreds, of books to read. So I think my entertainment is covered. What's your opinion on Trump's tariffs? Says Benjamin. Yeah. I mean, again, Trump isn't somebody who I think is supposed to be president. Like, he's supposed to be the president doesn't run the country. He or she sets the tone, and Trump gives me he's a really bad person. But he got voted in. Guess why he got voted in? I'm going totally off topic. Because of inflation, which isn't anybody's fault. That's no politician's fault. Um, but people, you'll note with the exception of Obama, I found this interesting statistic. With the exception of Obama, after one term, it always switches to the other party because people constantly think my life sucks. This government therefore sucks. I'm going to vote for the, and I mean, it's just a small swing percentage anyways, right? Like 45% of the population votes for the same party again and again. It's just the 10% that swings it. But the reason Trump got in again is because there was inflation and people went to the grocery store and says, yeah, the economy sucks, my life sucks, the government sucks. I'm gonna vote for the other one. Um, so with the exception of Obama, that has happened. I think the last 9 out of 10 elections. So it wasn't Kamala's fault. I liked her. I didn't know anything about her until she emerged, and I'm like, she's actually a pretty cool lady. But that terrible man got in just based on people thinking that he's going to change something for them, and he's not. So on to the tariffs. I hope that my political dissertation was fascinating. Um, Tariffs are bad. They're, I don't think he understands, I don't think most Americans understand how they work, that they're paid by the American company that's importing the goods. It will stop. They'll either have to increase the prices, and if they can't, then they have to stop importing. Like that, that's just going to stop. So it has that effect. It's not that the Chinese people are exporting and are paying extra for it. It's the American importer that's paying it. So they'll stop, go out of business, and there'll be an American there'll be an American company that makes the same goods, except it'll be more expensive. Arguably American jobs, maybe, but everybody else will be paying more for those goods. So they're inflationary. Uh, it's also inefficient. It is supposed to be the lowest cost producer, even if you have to ship it halfway around the world, that makes the goods. So this is economics 101. Like wherever they make it the cheapest, that's where they're the most efficient. That's who should be making it. Politics, obviously, overriding that. Um, it's not going to stop world trade. It's going to slow its increases. Like I read an article about it. The way media makes it sounds is like everybody's going to be completely isolationist. That's not it. What even Trump's best efforts did was they slowed the increases in trade. That's all, which to me was sort of eye-opening. Like the world is still very interconnected. Um, but then what happens is if you put 25% on Canadian and Mexican goods, Canadians are going to do the same thing, which will make it more expensive for Canadians. And being a much smaller economy, that could actually have detrimental effects on our GDP and everything else. So they're just bad. They're just bad. Being inflationary, they could actually lead back to increases in interest rates, which Trump hates. But yeah, I mean, it won't be the only factor. Um, so yeah, it's not good policy. Just like he is, it is being a bully, and it's likely he's just trying to use it as a bargaining chip. But the thing is, everybody else can do the same, and then it just gets worse and worse and worse. Like I don't, it leads nowhere. It's a dumb idea. Okay. Andrew says now you have to shovel your own driveway. Yes, I do. But you know what? I go running and I go work out, so a little bit of shoveling, no problem at all. Actually, because I don't have a car, I don't have to shovel my driveway until this Friday when we have the monthly meeting of the investing club. which because of the puppy, I invited people here. You better not have something. What is it? You got a leaf, okay. Okay, free. The puppy brought in a leaf, which is okay. What is much worse is she brings in poopsicles. So just the leaf is okay. Hey, baby. But because of the investing club meeting here this week, I now do have to shovel my driveway, which has about a foot of snow on it. So that is going to be good exercise probably tomorrow. I don't want your. Okay, all right. BB says, "What's your long-term economic view on Europe? I cannot see anything they excel at other than olive oil and Airbus." Yeah, Europe isn't my favorite place, just especially the Western developed part, again, because of my demographics. It's yeah, it's like okay, so my overall portfolio, about half of it, give or take, is Canadian dividend payers for the low tax Canadian eligible dividends. And then I have individual American stocks, which I'm perfectly fine analyzing myself. And then I have, through ETFs or mutual funds, I have, no kisses, please. All right. All right. I have the coverage of both the developed world and then the emerging markets. And so if one of the mutual funds, and I'm sure more than one of the mutual funds, if they pick individual stocks in Europe and they feel that those are going to be good companies that will outperform, no problem. But I want to let them do that. Like I certainly wouldn't feel comfortable doing research on something because I can't really get the information. And so from everything in the US and outside of North America, I'm looking more for capital gains. I'm not really looking for dividends, because the dividends get taxed harshly as salary. So those I would look for capital gains. Andrew says, is she a pit bull? So she's, according to the Humane Society, she's a rescue. Now anything bad she does, I'm like, oh, she's a rescue. She's pit bull, Stafford, American pit bull, Staffordshire Terrier. From some of her looks, I'm getting like a duck-tolling retriever, I think is the breed. She's a mix of all sorts of stuff. They say she's going to be 60 to 70 pounds. She's about 25 now. She's definitely heavier than when I got her. I biked her home from the shelter in the snow, 15 kilometers there, filled out all the paperwork, then put her in the backpack in the front, put one of my jackets on her so she wouldn't be cold because it was negatives, and she had her little head sticking out of the backpack in the front. I was not comfortable pedaling at all. It was dark by then, and for 15 kilometers, she rode out front like a queen, probably enjoying the ride way better than I was. Baby says, okay, so we'll call it agnostic on Europe. Yeah, I mean, you'll get good stuff and bad stuff. I'll tell you, and I would not suggest, but offer on CanadianMoneyTalk.ca. My whole portfolio is out there. The 3 different brokerages, I compile it every weekend into Quicken, and then I export it, and once a month I stick it out on the website. So go to my portfolio, and at the very bottom is my TFSA, and there I have 4 ETFs, which I tell everybody, if you're a beginner, either do an all-in-one ETF, which is going to be 65% US, like 3% Canada, and then everything else. But US is 65% of the world capitalization. Okay. So you could either do that and never have to touch it again, just keep feeding it money every month and you'll be fine. Okay. Other people do, hey, can I just do an S&P 500? I'm like, fine, you got multinationals, you can do that. And for my portfolio to have a little bit of control, I have one ETF that follows the TSX, second ETF that follows the S&P 500, next one that follows EFI, which stands for Europe, Australasia, Far East, and then I've got emerging markets. So Europe would be in that EFI, the basically developed markets ETF. If the US keeps doing well, which is great, no harm. I keep slicing a little bit off, and I keep feeding it into the emerging markets, and then the $500 I do every month into my TFSA is also going into the emerging markets ETF. That's what I do. So I wouldn't say I'm agnostic, but it's sort of what I've chosen. I can't see the future any better than you guys. I have an opinion, which, take it for what it's worth. Benjamin says, have you ever been to the US before? Absolutely. Tons of times. Not only shopping across the border when I was a kid in Vancouver, but I worked for a software company. So for 5 years, I implemented software all over the US. I've been to New Orleans 3 times, San Diego for months on end, LA, the Eastern Seaboard, a bunch. Yeah. Las Vegas also. This was all on work trips. I did own the US real estate, but by then I was petrified of flying. So I never saw any of those personally. I actually didn't see this thing before I bought it either. Saw pictures, had the realtor do a video walkthrough a bunch of times, but like I arrived with a 24-foot truck full of furniture, and it's like, God, where does this couch go? Where does this go? And then I rented the services of a mover, and while she was here, I'm like, well, okay, I guess this cabinet goes in this room and that cabinet goes in this room. I knew I couldn't move it after that because by myself I couldn't move it, and I didn't want to inconvenience the neighbors. So kind of an interesting story, if you will. I've been to the US tons. I guess, yeah, you get all sorts of people everywhere. Baby says, I'm afraid to ask, are you at least flying first or business class? Oh God, no. No, I'm 6'4". Stop scratching the chair, please. I'm 6'4", so flying in steerage isn't comfortable. When I flew on my last trip, it was either short distances or it was 787, which had decent enough leg room because it was a long haul, one from Calgary to Tokyo to Japan, and then I flew back from Singapore to San Francisco. So it was a long haul flight, so the plane was comfortable enough. But yeah, I've flown in first class once when I was traveling and a coworker had like these upgrade certificates. So for the flight to Seattle from Vancouver, I got upgraded. Flying for me is a commodity. By the way, just to make it about investing, I don't really invest in airlines, or I don't invest in airlines because they're a commodity. Like nobody's expecting anything magical. Nobody's like, I had a really great meal. Like that's why I'm gonna fly this airline. Um, get me there in one piece. Don't poison me. Get me there vaguely on time. By the way, each and every flight either changed. No, she's pulling up carpet. Excuse me. You've got this to play with. You've got that. Somebody's full of beans. Every single flight either got rescheduled, delayed either with some notice, or delayed at the gate. Like it, and I just hate flying. Like I'm just afraid. I don't know if that's I don't know if that's the right word, but like I've watched enough on Discovery Channel. There's a show called Mayday. I worked for a year. I worked at a subsidiary of Boeing. We made the maintenance software for the 787 back when it was still a new and being developed plane. Ow! No biting. Benjamin says, have you ever been to Illinois before? That's the state I'm from. I think I've been at the Chicago airport. I think that's about it. Yeah. I I don't know. I don't feel the need to travel period and the US. Like I like history. Um, so like the Far East was good for me. I spent a lot of time in Europe. So the castles and the churches all sort of start looking the same after a while. So do the temples in Thailand and Cambodia and so on. I enjoyed I don't know if this is interesting, but the thing I enjoyed most on my trip was I rented a bike when I was in Cambodia. There's this area where there's all these temples, like usually fallen down temples, but there's like dozens, if not hundreds of them in like a 50-kilometer area. And I rented a bike for a week, got a, a ticket, like a pass. You could go to all of these temples, and um, I biked around, and I was great while I was biking. That was very enjoyable. I was afraid somebody was going to steal the bike once I actually got off of it to go see the temple, but all the temples end up sort of looking the same. So I don't know why people like to travel. I find it stressful, a lot of logistics, um, never knowing where you're going. Like if I took taxis, it wouldn't be a problem. I had Google Maps and I walked from wherever the bus dropped me off to the hotel. And it's like, oh, this is the party area of Bangkok. I wanted to be in the historical area. Oops. How the hell was I gonna know? Um, Bibi says, "Are you're making me afraid of reaching my financial goals? The discipline it requires seems to remove the." No, that's just me. Remove the desire to fly business and buy Raptors. Um, I yeah, it's just because and I'm not the only one. Like I've listened to podcasts about it, and I had somebody ask me about it, and I made a video about it as well, answering their question. Um, when you're in an accumulation phase, you sort of get used to it, and you're like, yeah, just do the minimum, and everything else just keeps getting invested, right? And it's like, okay, I'm here. I am now. I'm done, and you can't like nothing is worth it to me. I don't enjoy it. It's just a mindset which I had gotten into. My main goal was not to have to work anymore. Um, that I achieved. I know I'm never going to spend the 6.1 million that I'm worth now. Like it, just for me, that's impossible. No, I get that you're joking. I never felt the need to fly business class. Like I just want to get there in one piece. Um, I could spring for, for extra leg room sometime, but um, oh, so you're very much like me. Had one vacation in the last 10 years. Well, it really depends on what you want from life, and you need to be aware of it and do things consciously. Like it's like, well, I want to enjoy life now. I want to travel for like there's 20-year-olds who do this. They finish whatever school. It's like, okay, I'm going to work for 6 months, and I'm going to use that to travel. And like where I was, and that, by the way, that's not where I went, but like Thailand, etc., are super cheap to live in. Like on my 3 month trip, including hotels, flights, everything, it was under 10 grand. It was like 9,700. Um, so super cheap. So some people do that. Some people work remotely there. Like if you're a programmer, it doesn't, you can work remotely and so on. I just never been to that area before. But like you have to like you have to decide what kind of life you want. Like if you want to enjoy life while you're young, it, you can, and like it's much better to travel and probably cheaper as well. Like uh, my last trip with my ex, probably leading to it being the last trip, was we stayed in like bed and breakfasts traveling around Europe instead of in hotels, and we could afford it at that point. And like even now, I stayed at cheap hotels. I like I have no need because I'm gone all day. I have no need for an amazing hotel. What and it just kind of goes against my nature. Um, yeah, maybe the biking for me is a health thing. One of the things I'm afraid of, not, I mean, I've seen a lot of people messed up from car accidents as well. But I mean, if a car hits me on a bike, then obviously there's not going to be much left. Um, but the thing is, once you get a car, then it's like, well, I'll drive over here, and where before I would have walked or biked, I'll drive, and then I'll gain 50 pounds and so on. Like it's walking and running and biking. Like I want to live as long as possible, and exercise is one of the best ways to make that happen. So there is that as well. Obviously, now I have the time. When I was working and I was taking transit, it took, well, depends where I was working. Like I had a friend drive me home from work during rush hour, and he's like, "I'll drive you." I'm like, "Oh, this is going to take a long time," and it took twice as long as transit would have. But anyway, uh, so yeah, like we all sort of have our own life to live, right? I have to admit, like dating was an interesting exercise. There were a few women over the years, like small percentage, very small percentage, but few is like, how are you going to pick me up? Like, well, come on, it's women's equality. You can pick me up or we can meet somewhere. Well, so I remember a few young ladies not wanting to because of that, which is fine. One tried to convince me actually fairly recently. So within the last 3 years, she was on TikTok. She had heard of me on TikTok and then contacted me through like a regular uh, dating app. And she's like, "Oh, you're on TikTok." I'm like, "Yeah, yeah." And like she said, "Oh, you should get a car." I'm like, "Well, I don't really see the need." And it was all about her. It wasn't so you have more time and so you enjoy life more. It was for her convenience. So that one didn't even lead to a first date. Um, Baby says, I agree with you on that. My weight is not close to yours. That is a battle lost. Working on it currently. Yeah, I'm 6'4" and 180 pounds, and I'm feeling like I'm in pretty good shape. Probably the best shape of my life, I could argue. Um, the running is slower and slower, but before I got this little friend, I was running 5 kilometers 3 times a week. Um, I'm not going to win any marathons, and I don't feel the need to do triathlon or anything, even though the biking part would be easy enough. But yeah. So yeah, like everybody sort of needs to make a conscious decision. But the thing is, a lot of people sort of get out of school and woohoo, I'm on my own, finally get to be me, and they get into credit card debt. They probably have some school debt. Then they get a decent job and they're stuck. They have to keep working. Then girlfriend, wife, then we got a mortgage, and they're basically just sort of constantly reactive and putting out fires, and they're not planning anything, and they're not researching on anything, and they're depending on financial advisors who don't have their best interest at heart, but they don't have the extra couple hours to learn something and actually do the research or do it themselves. And then maybe the mortgage is getting close to paid off, and now the kids need to go to school, so now you're paying for that. And then suddenly you wake up in your late 40s or 50, and it's like, well, this retirement thing's coming, right? Okay, mortgage is paid off, kids are gone. Hopefully they're not coming back. Um, so now we got 10, 15 years to save for retirement. And the thing is, um, if you were climbing the corporate ladder or whatever, and you have a really good job and you really buckle down, you can still do it in those 10 to 15 years. But the thing is, if you started when you were 20, would have been so much easier. Time would have done the heavy lifting, and you would have put in a very small percentage of the money yourself, and the rest would have been capital gains or interest or whatever. Um, but people sort of suddenly wake up and it's like, oh crap. So Benjamin says, I'm also 6'4". Hello. I weigh 280. Wow, you play football. Okay. So you're a lineman, I would imagine. Oh, good for you. Uh I yeah, you got me by 100 pounds, so good for you. Um BB says someone needs to pay those eligible dividends. Yeah, for sure. So we both depend on those people making payments to banks and car loans. Yeah, with Canadian banks especially, it is great to be an owner. It is not so great to be a client. Mm-mm. Like they just gotten used to charging $20 a month and just for having an account and stuff like that. Like that's not great. Car loans are terrible. To borrow money for a depreciating asset is just a really bad idea. Um, if you need a car to get to a job, I mean that's fine, but you don't need a new car, arguably. So I would kind of throw that out there. Like I said, 3 to 5 year old car, drive it into the ground, buy it for cash, probably private, because the more people that have a handout, like at a dealership, the more expensive it is, and likely you're paying for it. The trade-ins, they rip you off. I mean, used car dealers are, it's a cliche, right? Like they're just not great. So, anyways, all right. Well, gentlemen, or one gentleman, I hope this was interesting. I will do it again in a couple of weeks. I next Wednesday is going to be on TikTok, and unless anybody has any last pressing questions, I think we sort of covered covered everything. Yeah, you're welcome. I enjoy having a little chat like this, even though it is somewhat of a monologue. But I hope I was able to help a little bit. So I will wish you guys a good evening, and I will see you later.